You are listening to chartingwealth.com for Wednesday, the 30th of August, 2017. We see stocks are up for the day. We also see 20-year bonds are up. Gold is down about 0.25%. Let's jump first into the S&P 500. We have had a weekly vertical and two-day crossover, both occurring on Friday, the 11th of August. 3 down weeks up until this current week, and so far 2 days into the week we have what looks pretty much like a green doji. That of course means indecision. However, when we look at the weekly chart, what do we see? Well, we see the derivative oscillator continuing to heat up, going down. We see the price percent oscillator continuing to move down, maybe not with the same steam it had started off with at that week ending the 18th of August or even the 25th, but it's still moving down along with the red signal line. As we look closer, we see on that 2-day chart, we see that again, it's shifting more to parallel, but still going down. Derivative oscillator still negative. The price percent oscillator, again, not positive by any means, but again, shifting sideways. As we look at the last 3 candles, we can clearly tell that all of the price movement is showing us a lot of indecision. It is the latest candle we have is a red, pretty much a red doji. All of the price movement is within the down movement on that 2-day candle all the way back on the 21st of August. We still have price movement below the weekly. It is, however, above the 2-day as we look at that 2-day chart. Lastly, we'll look at the 4-hour chart. Does appear to be a pullback underway since we had the 4-hour chart crossover on the 23rd. However, as we mentioned on yesterday's program, when we look at things, we see that price movement still is not above the bump up on the 4-hour chart from the afternoon of the 22nd, sliding sideways. Now remember the adage, all things being equal, the market tends to move in the direction of the largest chart. And the weekly and the 2-day chart are still down. Those of you who are looking for an opportunity to get into a down move on the S&P 500, what does that actually mean? Well, that means getting into another ETF that is an inverse fund such as SH. It is the short fund for the S&P 500, so that when the actual S&P 500 goes down, the short fund goes up. What should you be looking for? Well, we want to look for a crossover. And again, we're going to go back to the S&P 500 just so we can keep everything straight in our heads. We want to look for a crossover on the 4-hour chart going down. Again, if the 4-hour chart rotates over going down and it's been losing derivative oscillator energy, however, it does look like at the end of the day, we did have a bit of a bump up on the price percent oscillator. If and when it crosses over going down, and the 2-day chart and the weekly chart are still in down moves, then of course that would be your trigger point to jump in on a down trade. We've just seen a long sideways slide. That's all we've been seeing since the 23rd. So keep that in mind. May have an opportunity coming up this week to jump into a down move. Again, S&P 500 up 0.11%. What's going on the Qs? The Nasdaq 100 up 0.39%. It also has been sliding sideways. We had a weekly vertical crossover occur on the Qs all the way back on the 16th of July. And what's been happening since then? Well, I guess the 23rd. What's been happening since then? Down for a few weeks, up for a few weeks, and then started trending down again. Never lost that weekly vertical crossover going down. Derivative oscillator still in the negative. The price percent oscillator, we have a green spinning top so far this week. Again, sideways sliding movement. Let's see what's going on the 2-day. Still in the negative, although the price percent oscillator's flattened out. The derivative oscillator still in the negative. We have 3 we have 3 green dojis, lots and lots of indecision. And again, we keep coming to all things being equal, market tends to move in the direction of the largest chart, which is that weekly chart. So we'll continue to watch as we hone into that 4-hour chart. We see that it did cross over in the morning on the Monday the 28th, and it did bump up considerably in the afternoon. And that movement, unlike the S&P 5, well, even then, that movement did not close above where the market bumped up back on the afternoon of the 22nd. So continue to watch and see if the Nasdaq 100 continues to move up and pulls over the 2-day and later the weekly chart. Then, of course, we're back to the races on up movements. But be watching for a potential down play in case it rolls over going down. Then you can get into the inverse Qs trade. Now, again, we talk about inverse funds. They make money when the market goes down because they go up when the underlying index, in this case, the Nasdaq 100, goes down. How does that work? You don't have to worry about how that works. What I encourage you to do is to listen to our training that we have at chartingwealth.com on inverse ETFs, how to make money when markets crash. So again, need to have that knowledge in your quiver. Okay, let's keep moving through these charts. We're going now to TLT, which is the 20-year bond fund. The weekly chart continuing to move up, my friends, 0.32%. It was up for the day. We have a green, very nice size green up movement on the derivative oscillator. And of course, a nice clean line moving up on the price percent oscillator. Of course, 4 weeks going on, 4 weeks of up movement. Very nice and clean. As we look at the 2-day chart, what do we see? Well, of course, we had our 2-day chart crossover going up on Friday the 11th on TLT and has continued to move up quite nicely. Derivative oscillator gaining energy and the price percent oscillator continuing to move up. When we hone into that 4-hour chart, what do we see? It was a big bump up in the morning and then a bit of a roll off in the afternoon. Of course, those of you who were looking for another opportunity to get in, that opportunity, of course, was not in the morning, but was in the afternoon potentially. And just continue to watch and see how much higher TLT is going to go. We'll just take a quick glance at the 2-hour chart. Of course, had that huge bound up in the morning once the charts opened, and then of course the market was digesting that giant green candle throughout the course of the rest of the day. Lastly, we'll go to gold, the only ETF we had for the day that was down just a little bit, under 0.25% at 0.22%. Gold, of course, crossed over on our weekly chart going up the week ending the 11th of August. We have 1, 2, 3, 4, 5, 6, 7, going on 8 weeks of up movement on gold. The latest candle that is being drawn throughout the course of this week, the latest weekly candle, only 2 days into it, has pumped up above the Bollinger Band. So we're seeing lots of up movement in gold with a big old wick on top. Gold's continuing to accelerate up. Let's check out that 2-day chart. What do we see? Well, of course, it crossed over going up back on the 24th of July and has continued to move up with a couple of pullbacks, 3 pullbacks since then. And of course, as we look at the 4-hour chart, our prescient 4-hour chart looks like it has started to work again nicely. Crossed over going up there in the morning on Monday the 28th and continue to rocket up in the afternoon of Monday, and then in the morning of Monday, bit of a pull back. We have sort of a doji or a spinning top there at the end of the day, so continue to keep an eye on gold. And again, folks, remember, all things being equal, the reason we look at those big charts is the market tends to move in the direction of the biggest chart. Your trick is to figure out how to jump in on a move once that weekly vertical crossover occurs. We have lots of great teaching on it. If you've not listened to our weekly vertical crossover trainings, we have 2 of them available at Charting Wealth under training. Please listen to those. They're also available at our YouTube channel. We do appreciate all of you liking us, or I guess subscribing to our channel at YouTube. Please do that for us. And of course, please, by all means, go to the website. The way you get all the benefits that we offer, the daily, the weekly market worksheets, the trade worksheet, the how to read a stock chart video, and the layout that we use at freestockcharts.com. You get all of those things when you subscribe at chartingwealth.com for free to the daily market review. God bless you guys. Answered a lot of questions yesterday. You got more emails to send to us, more questions, problems, concerns. If you haven't signed up for our quarterly review, how to use that incredibly prescient quarterly chart, you need to write us and request to sign up for that. The only caveat is you have to be a subscriber to the daily market review, which is for free. You go do that at the chartingwealth.com website. What do we have to share with you? The magical chart that I'm showing on screen right now, when it crosses over going down, easily tells you to unplug from the market, shows you that when it crosses over going up, it's time to jump in and ride the train. It would have gotten you in and out of all the messes over the last 2 decades. It is an incredible chart. You only have to chart it 4 times a year. And guess what? We cover those on the program. Next one is going to be at the end of September. And of course, October 1 is the start of the fall-winter trading zone. So we're going to have another great training. But before you can participate in that at the end of September, you have to take the current one. How do you do it? Just email us at chartingwealth.com and mention quarterly. If you just say quarterly, that'll be enough for us to know that you want the quarterly chart review information. And we will send you a link to the training that we have. We've got nothing but kudos from folks on that. If you've not already taken it, you need to. The only way you get it is to ask and to be a subscriber to the daily market review, and you sign up for free at chartingwealth.com. You want to write us? You can always write us right from the website, or CW at chartingwealth.com. C as in charting, W as in wealth, CW at chartingwealth.com. God bless, my friends. All the best from the whole team here at chartingwealth.com.